Happy Monday, traders. Welcome to a fresh week in markets. Now, the US and Iran situation is still a mess with respect to them negotiating or trying to negotiate, getting back to the table to try to sort out some sort of peace deal. And so, for now, over 2 months, the Strait of Hormuz obviously has been closed. It's a massive issue. And finally, it seems as if the US is trying to address that issue. So just before the market opened, Trump has announced Operation Freedom. So Operation Freedom is where basically the US is going to coordinate for neutral tankers, so neutral ships that have been caught in the Strait of Hormuz, to start leaving the Strait. And that is supposed to start Middle East time Monday morning, so very soon. And it's been flagged as a humanitarian operation in that the ships that will be leaving, they are low on food and other essentials, etc. And in any case, the US has basically said that if Iran does oppose this Operation Freedom and does not allow these ships to leave, that they would basically respond very aggressively back militarily. So look, the stakes have just risen in a big way today in the Middle East. We've just heard back from Iran, and they've basically said that this operation violates the ceasefire. So they at the moment, obviously, they're not happy with Trump's his new Operation Freedom, and it's because obviously, if ships start leaving the Strait of Hormuz, Iran loses all its leverage in potential negotiations. So yes, look, the stakes have risen in a big way. Okay, markets have opened, and yes, they have opened positively on the back of these developments so far. In that crude oil, which had a weekly close above $100, so its second weekly close above $100, it has traded lower, but only about 1.5% lower, so not a big move lower. Look, even if the Strait of Hormuz did reopen today, obviously to get supply back to any of the sort of levels it was pre-war is not only going to take months, but it could take up to a year. So look, crude oil still is going to be trading at elevated levels, regardless of the outcome of any of this. So it suggests that down towards say $90 thereabouts, we're probably going to see some pretty solid support. In any case, US equities, yes, they did gap higher on the reopen on the back of Trump's new plan, and but US equities, Nasdaq, S&P, look, they have literally stopped trading the war a while ago. Literally, we saw the lows just before Easter. Ever since then, we've seen an aggressive rally, new record highs. And look, they have been trading. The only way to describe it is obviously bullish and very bullish. In that, we've also seen last week the big tech earnings. So for Q1, for a lot of the big mega tech stocks, look, they came out positive, okay. The big tech at the moment, especially the Magnificent Seven, make up a good 40% of the market cap now for S&P and Nasdaq. So the narrative at the moment for equity markets, US equity markets, certainly has been chasing the AI dream and trading AI in a big way. Look, potentially what could disrupt this rally at the moment? No doubt, if Iran and US did go back to war, we saw military escalation again, certainly that would get it down. The other thing is that over time, if we do see a deterioration maybe in economic data, so obviously inflation higher, yields higher, and potentially we start hearing more about recessions, etc. But at the moment, equity markets aren't seeing that. They're disregarding it, and they are still well and truly chasing, as I said, the AI dream. So equity-wise, everything's still very, very positive. On the currency front, we're seeing Aussie dollar, risk currency, obviously it has been following risk. Yes, it is trading above 2-year highs now at 72 cents. So yes, if you are trading currencies at the moment, Aussie's probably the best to trade. Just keep it simple. Risk keeps bid, Aussie's going to keep bid. If we do see risk get hit, then sell the Aussie, it's going to work. The other currency that's worth noting is obviously the yen. So dollar yen actually had a big bearish outside range week last week, and that was back on the back of Japanese intervention. They have drawn a line in the sand at 160, verbally intervening, physically intervening in the market. So yes, chasing dollar yen. If we see any sort of retracements this week back higher, it's probably opportunities to re-short dollar yen, probably at better levels. And other than that, at the moment, obviously the currency market has been, I guess, trading sideways. We haven't seen any sort of big directional moves in the US dollar. As far as precious metals are concerned, gold has been trading sideways as well. Literally the range there has been 4,500 to 4,800, so $300 range. Yes, it does trade in a wide range, almost on a daily basis. But we haven't seen any sort of directional breaks there either, higher or lower. Look, it has been trading more as a risk asset during this this whole conflict between US and Iran. And also the other thing that's obviously weighing it down, it's not allowing it to rally, is what's happening with bond yields. Bond yields are elevated. At the moment, we've still got US 10-year yields around about 4.4%, and 2-year yields, US 2 yields around about 3.9%. So these are at elevated levels. And at the moment, technically, US 10-year yields have been trading in a big triangle pattern for the last year and a bit, almost 2 years now. Top end of that comes in around about that 4.5. So if we did break above 4.5%, technically that is going to be very bullish for yields, and we're looking to target levels well above 5%. So look, I'd definitely be keeping an eye on what is happening in the yield space. Okay, this week is a big week. We do have RBA locally here tomorrow in Australia. Australia's got an inflation problem. We've got inflation that is going up towards 5%. So the RBA is, well, the market does expect the RBA to raise rates tomorrow, but 25 basis points to take cash rate back up to 4.35%. So that is 3 rate rises by the RBA this year. And that also takes the RBA's basically cash rate well above all other central banks, especially the major central banks, their policy and cash rates. So look, that is no doubt a tailwind for the Aussie dollar. So if risk remains bid, that Aussie is certainly potentially going to go a lot higher in the medium term. Other than that, also at the end of the week, it is non-farm payroll, so we do get US employment data, which is obviously some US top tier data. So look, a lot going on in the markets as usual at the moment, but the focus 100% today is going to be on what actually happens in the Middle East, and whether or not the US is successful in getting boats leaving the Strait of Hormuz. But if for whatever reason that is stopped, and it looks as if we're going back to a military conflict, then no doubt these markets are going to react in a big way. So keep your eye on your screens, headlines, especially when the Middle East day breaks. Anyway, good luck. We'll check back in with you shortly.